Gap Inc. So this is a GPS stock. I'm on their investor relations page. So the big news is that they just signed a deal with Kanye West for a Yeezy clothing line, which is fun. And the stock is going nuts today off market. And so we'll take a look at the chart in a minute. But let's take a look at their balance sheet first. Investors, financial info. And I'm just on the Gap website here. SEC filings. And 10Q, June 9th. So it's pretty recent. So this is a good one here. And then we want their balance sheet. All right, so on the balance sheet here, here's a few quarters. And so you can see their cash pile has decreased a little bit. And their current assets decreased a little bit. And then their current liabilities have increased a little bit. So that's not a great trend. And, this is in millions. So 1,000 million is a billion, but it's a 1 to 3 roughly, cash to current liability ratio, which is upside down. Not good. It's not good numbers there. But it's better than a lot of a lot of stocks that I've looked at. So there's not a whole lot of companies that have a good balance sheet right now. And so this is the kind of fundamental analysis that most people don't care about. But I think it's good to just check it out, show you kind of where the balance sheets are and how to look at them. And then just like their total, let's see, liabilities is about 7, and their total assets is almost double assets to liabilities. So that's a positive book value if they were in bankruptcy trouble or something like that. Like the equity shares would not be automatically worthless or something like that. But not that that's a concern here. Just taking a look at the sheet, and it's a bad balance sheet, but not absolutely terrible. So this is just Google here. But here's the news: is they signed a 10-year deal with with Kanye for the Yeezy line, and they have a Yeezy logo that looks like the Gap logo. That's pretty silly. All right, so that's cool, man. That's a look at the news blast, and then let's jump over to the chart and talk about. All right, here's the chart. This is a long term. I'm out on the weekly candlesticks, going all the way back to 1989. So this is GPS is their ticker, and so they were super hot in '99, back in the good old days when the Gap and Old Navy were the hot brands. And so they've had a trading area in here in the 20s somewhere as a general idea that they've been swinging around. And then their last peak was in 13, 14, and they've been on a pretty general downtrend for a while. And so that's a good thing to know coming into this kind of crisis. Let me get down on like daily candles. Let's check out what they've looked like in the crash. Yeah, so they've been just kind of wandering down for a while. And then here's 19. Yeah. Yeah, here Feb 20. Okay, so this chart looks relatively familiar. I mean, you get the liquidity rip that everyone got here, and then a really slow recovery. But that last little pop that everyone got, they did a big jump, which is interesting. So now, yeah, this is the news blast here. This crazy candle that just flew up. So this is a pretty weak chart in general. It's a pretty weak chart. It's a long bear market that really ate it hard in the crash and didn't recover fast. And so I was looking at I guess there's the general fundamental that there's a shift from mall stores and retail stores, like brick and mortar, to online sales. And so, yeah, Gap ate it really hard here. Everyone did, but Gap doubled their online sales during this period, which is pretty good. And so I don't know if they have, really good inventory kind of infrastructure, stuff like that. But they are an online retailer that has, they doubled their online sales, which that is good. And so this price range here probably is not that good because they're only here beforehand. And so we're going to get a general trend away from, over, well, the trend was going to be like 10 or 15 years to kind of shift away from retail stores towards more online stuff. And now it just got like slammed into this year. We're just like compressed, who knows, like 10 years of stuff, of a slow trend into like everyone has to shop online right now. So it's not great for the sector, but it is going to favor companies that can survive. And Gap is, I think, in a pretty good position to do that. They're one of the stores that have been able to shift to online sales and kind of stay alive here. And look at the volume on this green candle. Yeah, and so the Yeezy thing is pretty cool. And let's just kind of jump into some tighter stuff and look at the technicals. All right, so I'm on a 15-minute chart so we can see the wobbles, but we saw that kind of a long-term medium valuation for them was around 20, and they came in close to that before this crash, and now they're jumping up to, yeah, like they're up at like 15 now. Like their valuation before anything went crazy was only about here. And so yeah, I don't love their sales tanked even though they doubled their online sales. Like their sales still tanked and they were only trading about here prior. So I don't see a ton of upside in the numbers here, but um yeah, so I just don't like this sector very much, and I don't see a ton of upside for this. And this big move up is already eating up a bunch of the upside. But let's take a look at this thing. So this is a cool candle. This is a cool candle on a news blast because usually when you get a news blast, you get like the off market crazy thing, and then you get an immediate sell off, like right on open or just right after open. And this thing is kind of starting to flag out, which is a really interesting one. So yeah, like good green volume on open instead of all the up moves off and then the huge red on open or something like that. So this thing has the potential to actually make some more upside moves now. It's not quite enough action to draw out like a pennant or anything like that. But if it makes it out into trading like midday and it hasn't dumped yet, then like this isn't a chart that looks like something to short for day trading purposes. It's not like a parabolic reversal chart. This is looking like it wants to kind of flag out and potentially move up, and then yeah, the news blast kind of thing. So on these kind of news blasts, I think probably like 60, maybe 70% of the time, it does this off market and it just, whoops, it doesn't round off like that. It does kind of a parabolic thing and just kind of does this. And then I search kind of for the area where I would expect it to land. And so we've had a general bullish trend here in good news. And so it probably should land above where it took off from in a parabolic reversal kind of thing. I would aim for somewhere in here-ish or something for a landing spot, sort of for a buying area. And I think this thing probably will come down a bit for people that are interested holding this thing long. I would probably put a target in here somewhere, 11 and a half maybe. And it got a little bit of, wobbly, grindy stuff here. Maybe that's a good spot. Just right here, I'm like, yeah, whatever. Yeah, like 11 and a half. It's pretty close. So this chart's not dropping out. So I think this might be a chart where you might get a continuation on this. This might be a chart that kind of gets some up action over a few days. But still, these kind of news blasts will usually resolve out. And so, well, today's Friday, so Yeah, if it doesn't reverse down to a good buy price today, I probably will buy probably be a better buy price by maybe Wednesday or something next week for a long. I don't really like this spot here. I mean, this is where we were pre-crash, and the fundamentals switched where retail stores are kind of screwed and they're forced to do online sales. And Gap has done okay with online sales, but they're not making back half of their sales with the little online sales increase. I mean, there's a huge drop in sales, and I mean, coming up here around 18 is asking them to do what they were doing before the crash. That's not happening. So, so yeah, I don't like shorting this chart. It looks like it's going to flag out and be unpredictable. And I don't like buying long up here for sure. I don't think there's a whole lot of upside with the numbers, and I don't like the sector. But as far as anyone that does like this sector and does like to go long, I think there is a target kind of in here to watch today if it comes down, or if it does kind of flag up. I think it'll reverse, and that target would be a little higher if it did that. Maybe below here though, it would be below here. So if it reverses today, probably down here in the 11s, and if it goes up more in the 12s, probably would be somewhere I would expect it to get to for a buy price. So let's just look at the gap chart and let's see what the S&P is doing. Yeah, so this whole sector of kind of retail stores is a sector where I would look for companies that are just not doing well at online sales, and they're not paying their rent in their buildings and things like that. And we've already had companies like JCPenney's go bankrupt, like Macy's is in a ton of trouble. But this is kind of a whole sector of stores that are super risky, and as the solvency kind of pushes out, and if we get less mall traffic than we're even expecting due to we might be getting a normal reversal shape as we're talking. So yeah, this is a sector, both the commercial real estate, like the owners of the store buildings and the stores inside, are both just really bad business models right now. And it was gonna be a rough business model over the next 10 year anyway, but now it's a rough business model like now, like this year. And they're gonna have to prove that they can compete with Amazon and compete with a slower economy and survive this kind of stuff. And these stores have big debt, and they have upside down cash balances, and they can't pay their rent, and like the rent furloughs and things like that, like companies aren't paying, and it's okay for a month or 2 months, and maybe they can get another loan to kind of drag it out, but at some point, like, they just can't, they don't have the cash flow, and they don't have the sales to keep up with their bills. And so that's kind of the solvency outlook, and this is a big sector to you know to do a big solvency risk evaluation and try to figure out when it's going to turn over. And I don't think it'll turn over this year, really, because I think that most of these companies that are in trouble right now are able to delay their payments on their buildings, and they're able to get a little bit more cash flow, a little, a bad loan, sell some bonds, all those little tricks to get cash flow to float a little bit longer. But yeah, I think the real estate and retail sectors next year are going to be a huge, huge thing to watch on the solvency. And so, yeah. Anyway, I don't like this company long. I don't like them long, and I think later, check the solvency risk on these guys. Not much upside. Um, I think it's a bad time to short something like this too early, um, especially on this. But if this thing pops up to a price that seems like nonsense, like up to where it was pre-crisis or something like that over the next 2 days, that might be a position to put on like a 2-year kind of short position or something like that, like a really long-term put where you could just see the solvency start hitting a bunch of companies in this sector, and maybe, if they're on a hype kind of spot, it probably would reverse down at some point, maybe in the next 2 weeks, maybe in the next like 3 months, or um, yeah. So that's just kind of a look at where this chart is, and I don't see a lot of good trades to do on this thing unless it goes to a nonsense valuation that looks like a good short to put on now. Um, yeah, as far as like long-term buy and hold, I hate this whole sector, and there's more and more competition coming on from from Shopify shops, and there's a bunch of small businesses coming out competing in the clothing industry and things like that now as well. Supply chains are really complicated, so yeah. Anyway, this is complicated. I'm gonna go look at the charts. We have some live action. We're in the cash. Oh, really? Oh man. Okay. Yeah. So the off market stuff was just kind of blah, and so I was painting this. You get like a 1, 2, 3. It looked like an expanded flat that we were finishing yesterday, like 1, 2, 3, 1, 2, 3. You get like the little mountain. This is like a bear shape flat. Where you get the little mountain, and then you get the 5 wave. And so it looks like a flat, but as far as a bearish continuation, so the way that a flat works is you get your wave down into the flat. This is Elliott, just an Elliott wave flat. And expanded means that it's not dead sideways. It's like a little bit longer here and a little bit higher here. But that's what I was kind of looking for was, you get a wave down, and then you can take this, and here off the top of the flat, off the top of the 5 wave, you can draw roughly the same size. And so I had like a target like down here, but once it flagged way sideways, I was like, yeah, it's going out too far to kind of be a continuation on the flat. Like if it's going to reverse, it needs to do it. It needs to do it fast. Okay, so we're getting crazy. All right, let me take a look at some stuff here. So this is not too surprising. I guess this is off-market stuff, so um, kind of ignore the amount of time that happens on off-market stuff, and the cash is obviously down today. So I've been looking at liquidity. I looked at the balance sheet, the Fed balance sheet in the previous video. The Fed balance sheet just posted this week. It's down again, just slightly down. So the last 3 weeks have been overall just kind of slightly down, which is a monstrous change from parabolic up for the last like 3 months. I mean, the balance sheet blew up from like 4 trillion to 7 trillion, and now it has gone down from, I think it was 7.1 trillion to 7. It's almost back down to 7 now, but it's actually going down. The Fed balance sheet's going down. So that is a huge liquidity squeeze from the Fed's end, and the Treasury General account is still going up. So they're not pumping any helicopter money into the economy right now. And so the Treasury General account going up is also taking liquidity out of the market. So just the domestic US dollar is getting a liquidity squeeze as of 3 weeks ago. And I think that's what this downward kind of movement we're getting in the market is right now. Since here, like this top right here was right where they stopped expanding the balance sheet, and we got an immediate drop here. And so this might be smart money seeing the balance sheet and going like, oh, and just kind of getting out on that news. Just from the liquidity point of view. And so for now, we're still in this kind of zone here. And this blue line's the 120 moving average, which is similar to the long-term averages that other people use, but I like to do the 120-day moving average because it kind of you get the long-term trend, but it hugs the action a little more, and you get reactions off of it that you wouldn't see on the normal moving averages. Like this kind of stuff is just hits it really, really well all the time. So I really like using this moving average. Even back here, you can see, like when we got this wobbly, crazy action, like it was just going all over the moving average, bounced off the top of it. Like that's the kind of stuff you see with the 120 rather than the longer term averages where you're just like, oh yeah, we're kind of like above it now. Like you really react on this thing. And so that's what I'm looking for if we get a down move now. Like we're in this, it's a bearish sort of expanding zone that we've been wobbling in. And if we break down out of this zone, we're immediately right on this moving average, and that is going to get, it should get some crazy action. So from the bear side, I mean, you're looking to break that thing and then come up and back test it. And so what I have now is I have some long volatility and I have some shorts on like XLF and IWM. And this is not investment advice, but what I'll be looking for today, now that I'm seeing this this crazy candle, is if we get a big down move and we get high vol, which we're getting, I'm gonna probably be looking at a spot to close out some short positions. Let's see if the VIX is popping. It's at 30. Yeah, it's popping. Okay, so I mean the VIX, like on a real down move, the VIX should shoot up here into the 40s or something. But being up here above 30 is really heavy. Let me just say, like, the bull market activity is like down here below 15 that we were getting on that long bull market, and we kind of gapped up and we got crazy VIX activity during the crash, but we never made it back down. There's a gap in the VIX where it kind of jumped up into dangerous territory, like in the 20s, and now we've gapped up again into the 30s, which is a little bit more than dangerous. That's like immediate crazy stuff is going to happen territory. And we've been just kind of grinding sideways, but with the volatility this high, you can just get huge moves. And I think we're getting one now, but look, like that's a really big candle, and that's not that crazy of a blast on the VIX. Let me check out the other sectors. Yeah, so these have just been kind of lagging down, the financials. Yeah, so these are the ones that are just kind of they have the most risk. I think right now these are the sectors that I'm short right now. Is and IWM I'm short really long term because that has the most solvency risk for cash flows, not getting bailouts, can't pay the loans, can't get sneaky financing, that kind of stuff. Like they have the most solvency risk. The companies in here, the smaller cap. This is the Russell 2000, and then the financials just kind of get more and more sketchy. They're like changing the rules. They're changing the buyback rules on financials this week, and they're changing dividends. They want to stop all XLF, all financial buybacks. They want to decrease bank dividends, and I guess that would keep more cash available on the balance sheets. But that doesn't sound good for the financial sector that they need to do that stuff. And the banks have not been doing buybacks anyway. They haven't been doing buybacks for months since the liquidation rip. They haven't anyway. I don't know why they would mandate that they're not allowed to do buybacks. It really doesn't matter. The buyback thing is not happening in any sector really, except like infotech, industrial stuff like the QQQ companies. Some of them are still doing buybacks. So like if the Fed comes out and says like the Qs can't do buybacks, like that would be. Let's look at the Qs. That would be really bad for the Qs. Oh, look, this is turning over. This could be a really interesting spot. Yeah, if the Qs turn over and actually make a bearish wave, like the whole market is going to make a huge bearish wave. And so a lot of people have been looking at this, and it's just not breaking down yet. I mean, it really needs to break down below here, and the moving averages are way down here, so it has plenty of room. Has plenty of room to make a move, but yeah, these guys have been doing buybacks. and the extra liquidity. I think this is the thing. It's like most of the sectors were not getting, like, they weren't doing buybacks. So Fed liquidity really has a hard time getting into the market except through buybacks. Like that's how it's been getting into the market, and the Qs have been doing buybacks. But right now, the last 3 weeks, there's no Fed expansion, so there's no liquidity for buybacks right now, and so that could be affecting this chart, but it hasn't turned over yet. It's already been 3 weeks with no Fed liquidity, but it may turn over. Yeah, we'll see. It looks like another week of bad liquidity, and of course the Fed could step on the gas pedal whenever, and we don't get to see it until the end of the week, but we just saw it. We just saw it, last night. So we know today the liquidity is super low, and so I'm not surprised to see a bearish move today. And also the GDP numbers, the world GDP and U.S. GDP numbers from the IMF came in uglier than expected, like way uglier for the world GDP. It was 4.9, minus 4.9 year over year outlook instead of -3. And that's the worst GDP number for the world GDP ever posted on a year over year basis. So that's a major thing on the world. Everyone knows it's kind of like a worldwide depression, but that doesn't immediately mean the U.S. stock market is going to dive. Like the U.S. can print dollars. The monetary system is U.S. dollars. The U.S. can print the dollars. And so there's a lot of arguments for the dollar to either go up or down. There's a bunch of macro theories, and there's a bunch of ways for liquidity to come into the U.S. market, flight to safety kind of stuff, liquidity operations. And the helicopter money, people are opening new accounts, and the new investors are coming in. So I'm trying to track where the money's coming from and where it's going to go has been kind of the puzzle. But as of right now, people are still getting their helicopter checks, their unemployment, extra money. So that hasn't stopped, but the Fed balance sheet has stopped expanding. And so less liquidity than last month for sure. But the thing to look out soon, I guess, this week it's a million plus unemployment claims again. Like that number hasn't started coming down, and then the PPP grants will post at the end of this month, which means companies that did not lay people off will get grant money. And then after that, starting like next week or like the end of next week, companies can start laying employees off without a penalty. Like they'll get the grant money, then they can lay people off. And so the next few weeks, we'll see if the unemployment numbers spike again. They might spike again. So that's kind of the liquidity, unemployment kind of outlook without looking at the like the Warren Buffett fundamentals and things like that. Like those haven't really started to take effect yet. But when solvency and bankruptcy stuff starts really happening to a lot of companies, like those fundamentals are going to start mattering again. So that's sort of the short term and the long term outlook. And yeah, this area down here is hot. I mean, we haven't been able to break down out of here. And if we do like get a little break past it, we're getting right to this. Like I'm gonna get out of a bunch of positions. If we break down out of this zone, I'm gonna start getting out of a bunch of positions today. Because I think the odds of crazy bounces or who knows what, when we start getting around this area, it should get pretty crazy. I would be very surprised if we just like sliced through here, like way through here in a bear move. I don't think so. I mean, we've gotten so much action off of this moving average the whole time we've been near it. So yeah, that's the target. Well, that was the target I posted yesterday. We're about to hit it right now. And if we break through it, especially with some volume, the more volume we get here, the more likely it bounces. We already have enough volume. To get a little bounce. But, I mean, you can see kind of The volume here went up a bit, and then you get a reaction. And the volume on this move down went crazy. This whole area, this is really big volume. Like this is volume that looks like what we were getting. Let me get to like some daily candles. I mean, these volume amounts are looking like what we were getting kind of in the dead cat bounce area here. Like, look how big this volume stick is. It's huge here. Yeah, this is really big volume. So we're not getting anything close to that right now. But when you get big volume like that, like a big red candle with big volume, that's a good time to just sell into. Well, not sell, like close short positions into that kind of a down move because it'll usually bounce. And that's what we got here too. You get these big moves down, the volume starts building, and then you get a bounce. And then of course down here the volume's absolutely crazy, and that's where we got the big reversal. Okay, so yeah, we're getting crazy stuff happening. It's just been kind of blah blah blah, just wobbling around, but the volatility is so high. It's like it's got to make a big move soon, but no indication on which direction it's going to move, other than some basic liquidity kind of stuff. All right, so let's flip through the. Let's see if the MACD's doing anything crazy. All right, so weekly MACD, this is like a 2-year outlook, is still in bear territory on the long term. It's trying to pull up into bullish territory. This is a big separation. It's still making its way up. And so for the long-term bear market outlook, we need to see if this thing reverses and stays in the bear market side of the chart. If it stays bear side, that's a long-term bear market outlook. If it makes it up here, it's starting to get bullish, long-term bullish. And if it gets up here and starts swinging around, that's bullish. So it's still slightly bearish, but it's going up. And so we don't know. We don't know if it's a bear or bull market. And the shorter term, the month-to-month kind of look here on the daily candles is still in bull territory. And now it's starting to steepen, a bearish move that's starting to steepen. And so this is the opposite kind of look for the kind of medium term for a month or two outlook. Is this thing going to get down into bear territory, or is it going to reverse in bull territory? And if this thing reverses in bull territory, that's bullish short term, and it should keep pulling the longer term one up into bull territory. And then we can kind of flip down, from monthly to weekly, bearish and dumping, bearish and reversing bearish. This is all really bearish momentum now. That candlestick really flipped it. Yeah, this is big separation, bearish moves. So I think we might actually get a bearish wave. We might actually get a bearish wave that pulls the short-term charts down into bear territory. Right now, the momentum's super bearish with that move, and that's the first momentum that we've really seen in about a week. Like this whole consolidation period, this whole consolidation area where we've been bouncing around has been just super dead momentum with no indication of a trend. And this one candle here has now flipped the momentum bearish in the short term over like maybe the next week or something. The momentum looks like pretty bearish on the weekly outlook. Yeah, so as far as long positions go, don't have any long positions. Like I was looking at the oil tankers. Let's see. Let's take a look at the tankers. Yeah, I was trying to spot like a bottom on the tankers. Like it looked like this might be a bottom where they're going to hang on, but it dropped out, and I got stopped out of that. And so, yeah, I don't know. This doesn't look good. It doesn't look like it's fighting against the S&P. So yeah, I don't think these are particularly interesting right now. I'm gonna keep watching the tankers and see if they kind of hit a bottom, because I saw news that there's the oversupply on oil has peaked again, and this time it's product. It's refined oil and crude oil that's peaked. So the refined tankers and the crude and the product tankers could possibly see a little oversupply action. And so like ST and G, this is Scorpio, Sting, their ticker is fun. It's following a similar chart, yeah. So I think like TNK and Sting are the best ones to look at the general shape of the tanker market, and Scorpio is the product tankers. And so I think that when this thing does kind of bottom, the product tankers could be a pretty good sector if they get a little oversupply boost, and then they get a longer term kind of good market for product tankers. And as far as longs go, gold, everyone is excited about gold this week, and this is a really good technical setup for gold to break out and like popped out of this consolidation range it's been in, and now it's kind of back testing it from the top, top testing it. But for me, the liquidity squeeze is not good for gold. Gold does good when there's too much liquidity. Dollars, yeah, yeah. If you print a ton of dollars, that's good for gold. Gold value against more dollars goes up and up. But if you're squeezing the liquidity, that's not good. And if the stock market is dropping to where people start selling their gold to cover stock market losses, the gold often will sell off along with the stock market, and silver is even more vulnerable to that. And yeah, it's making a little bit of a move down. So yeah, I'm not excited about this gold breakout chart right now. I know a lot of people are, but I don't like the fundamentals for gold this week, and I don't like the stock market chart for gold either. I mean, if we get like a 2 week sell off in the stock market or something like that, not like a huge ripping sell off like the previous one, but just a wave down. If we get a wave down, usually the first half of that wave is going to be bad for gold, and then gold will kind of start reversing before the stock market bottoms. And so I want to see if we get a real wave, and I want to see if gold follows the wave or not. And then you can kind of use gold to see where you are. If gold starts consolidating out, you can kind of figure out where people are on the stock market using gold as sort of an indicator. Yeah, what's like Tesla doing? Not much. This is transportation. Oh wait, no, RSP. Oh, sorry. Yeah, this is equal weight equities where they rebalance them, and that usually gives you a better look at sort of the liquidity. It's a better chart to look at relative to liquidity. I was trying to look at transportation because transportation is sometimes is a leading indicator. It looks pretty similar to the financials and stuff right now, so it's not super interesting. VIX is not blowing up like crazy, a little bit. Yeah, so this is a ton of bearish stuff, tons of bearish stuff, and people are long on the put call ratio right now. So we might get a long squeeze, and we may get more than just like a little candle down if we do get some actual bearish momentum starting, because it looks like we're actually getting bearish momentum now. Is oil holding up? Oil is just kind of Oil is really hard to predict now because it bounced so high. It bounced so high that even though it should be long term kind of bullish, it's already up so high that it's hard to guess where it's trying to go at the moment. Dow, yeah. Everything is pretty bearish, and even the Qs are kind of breaking down a bit. So, oh, the Japanese yen doesn't agree. The yen's not breaking down. What are the treasuries doing? No, it's still like a little weak move up on the treasury spread. This is the 530. Let me look at like a 210. So mostly, if the treasury yields are dropping, they haven't really been dropping. Like if they do start dropping, that's worse for financials. Right now, the yield curve's just kind of flattening out a little bit, which is, I mean, just a little bit, just for a couple days. But if it flattens out more, that is less inflationary. Like we started getting a steeper yield curve, and it was looking like a little more inflationary signal, but it didn't last too long. All right, so that's most of the things, and I think we are getting actual bearish momentum here that could follow through into more than one day of a bearish candle. And I mean, I guess we have done kind of a little bearish thing here. Yeah, wow, it did like almost all this stuff while we were talking. Yeah, so this is target one. Just test the edge of this range. Like it's broken down now already. It's broken down below this whole consolidation range already. So this is a real move down for sure. And it probably should be able to pierce this thing. But this is a whole different story. This target is a serious one. And so high vol near this target, I'm going to be closing some stuff down and trying to figure out what's going on. Yeah, wild. This thing ripped. Huh, okay. Yeah, I guess that's good. That's good in the gap, the Yeezy. That's pretty funny. Um, yeah, I don't like that sector, but I don't think that sector is going to be getting in trouble too soon. I mean, like American Airlines is in trouble like now, and some of the other sectors that have big debt and really bad cash flow right now are in a lot more trouble than something like Gap that can sell online. But yeah, Gap is an interesting one. Let's take another look at it and see if there's any more technical info on a shorter term chart. Yeah, it looks like it's flagging out. So this is a really interesting chart. Yeah, it did a little pennant, and now it's doing another one. So this is usually a bullish thing when you get these pennants. And yeah, I'm not gonna be trading Gap, but I don't know. If it got up here somewhere, like that would be a short spot. And it could do that. I mean, it's flagging out. It could pop again. If it pops again, I would be looking at a short spot. But this is not a stock that I'm really interested in shorting right now. I think there's a lot of other stuff going on that's a lot easier to predict than something like this. But Gap, yeah, that's fun news for Gap. Fun news for Gap, and not a whole lot of upside on the price range here. And also doesn't look like it wants to come down to a good buy range, even for kind of a medium length one. So that's Gap, that's the market, and bearish everything, just about everything now. The momentum is bearish now. I'm surprised how strongly that momentum opened up like that just on the candle today. All right, so yeah, I'll check and see if there's any other news. I think there's probably going to be a couple things to talk about today, but that's it for this video, and happy trading.